Hey guys, this is your girl Paula, the Queen from Queens. These are money minutes that matter. The mission today is to unveil the crucial aspects of financial security. Let's talk about insurance. Let's face it, insurance can feel like a tangled web of confusion. About 60% of Americans are insured, and 30% of Americans say that they're underinsured. We're going to shed some light on this often opaque topic, providing a clear and concise breakdown of the different types of insurance. I'm going to demystify some of the key terms. You and I here, we're accountability buddies. We're going to knock this insurance thing out the box. Insurance is important. Life insurance is your financial guardian angel. Think of it as a safety net, providing financial security when it matters most. But life insurance is not a one-size-fits-all. Here are some main terms that I need to talk to you about. Term life policies. This is the one that I love. It offers coverage for a specific period of time, whether 10, 20, or 30 years. And it's an ideal way to get a young family started, or for those who need basic coverage. The younger you are, the less expensive it is. The older you are, the more risk you are to the company. The higher the risk, the higher the premium you have to pay. So if you're about 30 years old, get a 30-year term life policy, 10 times your annual income. In the event your family grows, you have a mortgage. If you're not here, your family's covered. 40 years old is about the time of the key term. At 40 years old, your premiums jump exponentially. When we got our last policy, I was 39, my husband had just turned 40. His policy's premium is 3 times the cost of my monthly premium. It's real, but I need you to think about insurance today so that you provide for your family. Term insurance is significantly less than other types of policies. Instead of paying large premiums, invest the difference in a growth stock mutual fund. If you do it right, when your policy ends, you'll be in a position to self-insure. If you're 30 years old and you get a 30-year policy, let's just say at maybe $100 a month for, let's say, $500,000 or $1 million. If the policy ends by the time you're 60 and that $100 that you're spending on a term life policy, you take that extra $100 that you have instead of buying a different policy and you invest that $100. At the age of 60, when that 30-year policy is up, you should have enough money in your savings that you can self-insure. You should have enough money in your savings account that you don't have to worry about insurance. That also means you should be saving and investing for your financial future so it secures your family. You should not have kids at 60 years old who require you to help them with college. If so, they may be on their own. That's why term life policies are so important. It gives you a term. We've all heard the commercials. Oh, you know, Billy, he has high blood pressure and high cholesterol. We got him a $250,000 policy for $50 a month for 10 years. What are you not hearing? In 10 years, he'll be 50. If he has high blood pressure and high cholesterol now, he may have more comorbidities or more disorders, and makes him much more difficult to insure. So that $50 policy may cost him $500 10 years later for the same amount. Think about what you're not hearing with these policies. Whole life plans, they last your whole life. It's coverage that provides a lifelong coverage. It builds cash values. It allows you to borrow against the policy. The cash value grows tax deferred and you can access it through loans and withdrawals. Sellers say that it's good to build your wealth for long-term security using these whole life plans. But that's not what we say at Roberts Target Financials. We want to empower you so that you create your own savings, you gain your own interest that's much more than they'll give you at 3 or 4% with these whole life policies. You can invest your money. The difference between having a term policy and a whole life policy may be a couple of $100 a month. And they may promise you to get back all of your premium after 30 years. They may promise you to give you a guaranteed $50,000. You can take a term life policy for for that same 30 years and grow more than you paid in premiums, grow more that they can give you at the end, $30,000, $50,000. You can have more in your investments and your savings and still be in a position to empower your family. There's much more to the amount. You've got to read and understand the policies. Universal Life is a flexible blend of both term and life policies. You choose your premium amount, your death benefits, with a portion of your accumulating cash value. It often allows you to customize and control your policies. Again, at Roberts Target Financials, we give you the knowledge. Then you can customize your finances to ensure that when you are no longer here, that your dependents, your loved ones, people who need you to provide protection, that they're covered. Remember, knowledge is power. It is the ultimate weapon in this insurance game. Don't be afraid to ask questions. It's your money, it's your life, it's your family, it's your home that you're entrusting to be secured and be protected. On Wednesday, February 21st, 2024, I will have my good friend, my insurance broker. He is an insurance agent who owns his own company for more than 30 years. This brother is brilliant. He'll ask and answer all of your financial questions. Join me on my webinar. Go to my website, robertstargetfinancials.com. Sign up so that we send you the link. Let's continue to support your financial journey. Follow me on all social medias, including Facebook, Instagram, TikTok. Follow me on YouTube. Follow me at Roberts Target Financials. It's more than just a one-step thing. We're building a financial fortress, and you and I, we're gonna do this together. This is your girl, Paula. I love you. Keep watching, and I promise to give you more healthy tips to make you wealthy and strong.